Good morning. Welcome to OptionsTender. This is a members video. We're going to take a look at IWM on multiple time frames, and then we're going to take a quick peek at the 10-year rates, and this will give you a good picture of why this move really happened this way. And not only did we have what people are calling the Trump bump, but also it appears that the small caps are going to the moon, and I'm going to show you what's really happening at this point. It is Monday. Happy Monday, everybody. It's a short week. We have Thanksgiving off. It's November 25th, 2024. Let's jump into it. We have IWM on the monthly time frame, and in this big picture realm, we're looking at now a bearish divergence here on the higher time frames, and so it doesn't mean something has to happen imminently on this time frame, but this will give you a great example of that when the market does correct, it's going to be for a long time. And so in my view, I think this is a corrective move. It's a sideways move, and perhaps we lift off afterwards into a brand new bull market. And so really there's two structures we're going to look at, and this one in the higher time frame looks impulsive, and it looks like we want to correct after that, and I think it's going to be a flat pattern. And so this would be our A. We're diving into the end of the B, and we're looking for an impulse C to the downside, and I think that will be over. And so we'll look at a couple targets here, and for the bulls, with a correction, you could still even look at this as some sort of leading diagonal or such, and figure this will be a 1-2 setup. So the retracement will be much more shallow, and maybe this channel or so, but make a higher low and then head from there. So we'll have to keep that in mind throughout time. That's going to take many months to play out. So let's look into I think we're more likely to hit some of these lows here, perhaps. And let's just go over to this board, the big picture correction here. And if we hit some of the retracements of this large move here, we have the 50%, and clearly that's not even a new low. 62 would give us a new low and would be more or less the ideal situation for a flat pattern, and this would be an expanded flat, because, and also aka double top. We already made a new high here today, and we'd expand this move all the way to the downside as far as 786, and so that's where the 200 moving average on the monthly is. We have all of this trading right here, so you'll have a nice point of control, a lot of volume in the 62% retracement right here around the 150 area. So that's more likely of the situation that I'm looking for. All right, and so that's in a nutshell. Let's go down to the weekly. In a nutshell, this is our structure: A, B, C. That's what we'll be looking for, all in all. But just stick around for just a couple minutes. I'll just zoom through the rest. On the weekly time frame, just give you a look here. So we broke out from this point of view, just really nested here, and then took off at that point. Just super volatile, but we got through this trade here. And so once we got into there, it was likely that we'd get to the top of this trading range, but price clearly wanted to go reach the new all-time highs to test the highs. So okay, at this point, we have this uptrend line that we'll keep an eye at, and then breaking down from the 230 would be bearish at that point, and then we'd look for the bottom of that range again at 210. Let's get another point of view, more the near term. So this near term, I think it'd be more appropriate to draw the I think this is wave one here anyway, and so this would be more appropriate to line up there. So you see that where we're at resistance right now of this diagonal here, and as of right now, this is how we're counting it. where this last wave up here for the wave C would be the ending diagonal. 1, 2, 3, 4, and 5. And again, something like that. This still could be the one. It could be a flat pattern. Yada, yada, yada. For all of you Seinfeld fans. 1, 2, 3, 4, 5. Doesn't matter how you count it. You get the ending diagonal made up of 3 waves apiece. 1, 2, 3. They just had the 3 just can't be the shortest. So, all right. What else? 65. Let's go down to the 65. And then we'll end it. So we're at the options expected move. We're chasing off of there, or we're rejecting off of there. The risk here to the upside is, first of all, negative divergence on this move, but we don't have negative divergence on the really near term. Okay, so a lot of times these moves here, they're great, but in order to finish off this move, usually you get some sort of negative divergence in this very near term. We don't have that yet, so the risk to the upside is that we just go up a little bit higher. Maybe we gap up there tomorrow. So we're at the so of the previous move here, retracement or correction, we have our extensions, or really retracements. It's a retracement tool. So after you get past all of the retracements, you get past the 100%. We got up to the 138, the 127, and we just tagged the 150 today. And so the last target up here would be the 248 if need be. So if price gets above the 245 and heads to that 248, that would be the final target for this move here from this correction. All right. And so that's just where I want to show you if price wants to go a little bit higher. And just quickly with the rates. So here you have the 2-year, the 10-year, the 30-year treasuries. So you see that these are moving to the upside. That's going to bring rates down because that's inverse. And just to give you a look. Now, with a drop like this, that's a substantial move with bonds and rates. And when that happens, that really sets off, it makes a move in the market, change the character. And so that's what's happening. The small caps are loving the lower rates. It's saying, oh my gosh, we're going to the moon. But then it's going to realize as rates drop that that it's a bad economy and we're going to a recession. So we've talked about this in the past. And it's a boring subject. Nobody wants to look at bonds necessarily, but this is the reality of it, and it hit its high. I think it's done. Change that around, and we fall from here and creates a recession. Now, in a huge picture, I do think these will be very volatile. Maybe even a breakout to new highs here, but this could drop to new lows over years. And I think that the market may move sideways overall. And again, we talked about that in the past, and I'll bring that back up in the market review. So that's it. Thanks for joining us here, and we'll see you in the next video.